So Cathie Wood is just buying and buying more Tesla stock than she usually does, and it looks like Cathie Wood is actually on a shopping spree, which indicates that Cathie Wood is ultra long, longer than a horse's face. Because of course horses are known for their long faces and their long legs. Now some of you guys might be wondering, well, why does this actually matter? Well, here's the thing, right? So according to FINRA, about 70% of the trading activity is by large financial institutions. So when you have billions and billions of dollars under asset management slowly pouring in and dumping tens of millions of dollars a day into a stock, this could significantly influence the price of that stock. Now, in conjunction with that, we also had the CPI report recently come out, kind of just showing us that inflation is actually cooling off. Now, does this mean that the feds are going to start cutting rates? No, but it does mean that rates may start getting raised by a smaller amount. So for example, we may see an additional 25 basis points hike rather than a 50 basis points hike. And guys, here's the thing, the market is very forward thinking. So investors may be kind of pouring in more money as this is some, optimistic bullish news. But at the same time, one of the things that we have to take into consideration is that the inflation in the service sector needs to cool down from its current year-over-year rate of 7% to bring the overall inflation rate back to the Fed's 2% target. And so for the Feds to slow down the service inflation, what they have to do is actually continue hiking rates, this way that they could get more slack in the job environment, this way that wage and salary growth could also further soften. And the reason why the service inflation is such a big deal is because service inflation accounts for over 50% of the CPI report. And so even if the Feds raise rates by 25 basis points, which is bullish for the market short term, the Feds is most likely going to have to continue raising rates throughout the year of 2023, which is actually more bearish for the market longer term. And so the markets moved up short term based off the CPI report, but then Friday, in the beginning of Friday, we had the earnings come from a lot of the big banks, and that actually caused the beginning session of Friday to look pretty bad. Because of course, the earnings for a lot of these big banks was not too good as expected. However, later on in Friday's trading session, we then had a positive consumer sentiment report. And so what we end up having is the overall market slowly pushing upwards, as the overall markets is like, okay, well, we have two bullish things. We have the CPI report slowing down, and we also have consumer sentiment slightly rising up. Yeah, we had bad earnings, but yeah, we have two bullish things. And so we saw the overall markets push a little bit further up. But here's the thing, guys, the consumer sentiment report is still historically low. And even though the overall markets does move off this information, you have to understand that this information is still, very minuscule. It's very small, and it's not very long lasting. So, and if you actually take a look into this and you do your research, you'll find out that the consumer confidence is only measured by doing phone interviews of only 600 people in this country, which is very, very insignificant data. So though we saw a rally in the overall market, this is much likely not going to be a very sustained rally, and this is most likely a relief rally, as the market's kind of looking for anything to push up, especially after how bad it's been getting beaten down. Now, one of the things that I noted in the Push and Profit private group is that closer to the end of January is when we start to see how the current pulse of the market is, as we'll start to see a majority of the earnings coming out. But with that being said, I want to go ahead and highlight some more details on what's going on with Tesla stock, but I also want us to take just a more in-depth look into what's going on with the overall market as well. So we're gonna go ahead and hop into my laptop this way that we could just get a little bit more clarity. Alrighty guys, so we're officially in my laptop. By the way, if you guys made it this far in this video, chances are you do find some of the information of value or informational. So if you're not subscribed to the channel already, make sure to just tap that subscribe button. Just do it! Over 90% of people that watch my channel tend to not subscribe, and I think oftentimes it's because you can just kind of forget and you just move on. But if you do want to see more content like this, again, just tap the subscribe button. No harm to you. Now, right over here, I have ticker symbol SPY, which is the S&P 500 ETF, and oftentimes you're going to hear people refer to this as the overall market. Now, technically, is it the overall market? No, right? The S&P 500, of course, by its name, only has 500 companies in there, right? And the overall market has thousands of different tickers, right? But this is what people generally refer to it as the overall market, right? Now, with that being said, I want to highlight some of the, things going on with the price action. Now, if you're someone who is part of the Push and Profit private group, or you've watched some of my previous videos, you know that I often preach that, you should never just trade only based on one data point, example, just, the charts, right? Because technical analysis is just one thing, and the stocks don't have to adhere to whatever lines you have on the chart and whatever it's going on, because of course there's several different influences that could influence a stock going up and down. Example, Cathie Woods, or a fund manager or an institution putting millions of dollars into a stock, or what is the monetary policy looking like, what is the macroeconomic climate. I mean, there's a list of several different things, right? But one thing I do want to highlight is that technical analysis does have its time and place, especially if you kind of want to see what's going on, right? So I have the S&P 500, and we can see that pretty much since December of 2021, or in better words, I guess, overall 2022 has been a declining year. Now, one of the things I've said a multitude of different times, both on the channel, publicly, and in the private group, is that in a bear market, and this throws a lot of people off, but in a bear market, there are a ton of rallies, and you could clearly see that presented right over here. Long term, we're going downwards, right? But you're going to see that as we go down, we have these massive rallies, then we go down, then we have these massive rallies, go down. And in fact, oftentimes we have more rallies than we have going down. The only difference is the down days tend to be a lot more bloodier, right? They tend to be a lot more painful, right? And so right now, what I am saying is that it looks like we're having a bit of another relief rally, and we're kind of testing this, descending trend line right over here. Chances are we may touch it and break above it, and if that does happen, well, guess what? That's bullish, that's good. But if we touch this and we get rejected, right? I'm looking at maybe possibly getting rejected, or, entering a short position once we get rejected at around the $400 level for the S&P, or I guess for SPY. And that's when I'm expecting more downtrend, especially as we get closer to, as I pointed out earlier, the earnings calendar, right? Because now we're going to have more earnings coming out for a lot more companies, and we're going to see clear data that, the market is contracting, right? The economy is contracting. Businesses, companies are not making the same as they used to. And this is a major problem, right? Now, I'm going to go in and, of course, highlight Tesla. By the way, I do want to also highlight, just so you guys understand how much Cathie Woods is buying. So I want to show you guys this. So Cathie Woods on the 13th alone bought 168,000 shares. Now, if you do the math, of course, we don't know what her buy-in price was for Tesla for today. We could just, only imagine. But if we go into Tesla and we just look into the 5-minute view, and we just from the number could either range for 115 all the way to 122. So if we just call it an average of 117, that's still roughly almost $20 million that Cathie Woods has injected into Tesla today alone. And, that is a significant amount that could definitely influence the price, right? And that's something I talked about in the beginning of the video. But I want to also highlight something that I found very interesting. So if we kind of just zoom out, possibly go to a weekly chart, or maybe that's too far out. We'll have to do a 4-hour chart. That seems a lot more clear. Sometimes you just have to play with the aggregated time frame, so you could kind of just zoom into where you want to see. But what I can, identify is that we have a level in Tesla where, every time we touch this, resistance zone, right? Or I guess you would call it a supply zone, right? Because it's not really a resistance level. It's more of a supply zone. We could see that Tesla is just having a hard time breaking above this area, right? We kind of fall down, we touch it, we fall down, kind of hover. Cathie's buying more. We touch it, we get rejected, touch it, get rejected. Pretty much kissed it almost today, and it looks like, the candle getting close to it is a red candle kind of getting rejected. Now, why is this, right? Well, one of the things you have to take note of is just the volume profile, right? And that's this stuff right over here. Now, I have a separate video just explaining volume profile, but I'm going to go ahead and just kind of break that down. So oftentimes we're used to seeing volume just reflected in, time, but the volume profile shows us volume reflected by price. And so what we see is that around this area in particular, there tends to be a lot more volume. And so what that means is that there's a lot more trading. And so when you have areas where there's a lot more trading, that means that the stock is going to have trouble going up or going down. So it's going to present its area of like either a support, a resistance, because it's going to be an area where it's going to move sideways, right? But what we see is if we broke above this level, right, above this, high volume by price level around over here and going up, there's less volume, so Tesla could actually, fly up, and that's why you see when there's less volume, Tesla could easily fall down more quicker, right? Because there's less people participating, putting that pressure of buying and selling at the same time, causing the stock to, really consolidate. We don't really see that until we go into these levels right over here. So that's something that is, important. I think we should definitely take note of that. If we do break above this, well, hey, it could be a lot more bullish. Do I think we're going to break above it? It's possible, but I'm leaning more towards, a little bit more of a downtrend. Now, I want to go ahead and get into the reason why I believe we're heading more into a downtrend, but I also want to highlight something else I thought was pretty interesting. Now, if you just kind of plot together on a chart, the QQQs, which is a NASDAQ ETF, as well as the S&P, or the SPY, which is the S&P ETF, along with Tesla, what you're going to see is that, QQQs, NASDAQ, the S&P 500, the overall market is technically kind of like pushing more upwards, but we're actually seeing Tesla push downwards, right? And so I want to go back to Tesla and kind of go into a more zoomed in aggregated time period. And what you're going to see is it looks like a day where Tesla was much more bullish, where we rose up, but you have to also understand we fell down a significant amount in the after hours the day before. And so you have to really pay attention to the closing price. So Tesla closed at around 123, and then on Friday we closed at around 122. So it's still like it's significant. It's a downtrend, right? It's something going downwards. Now, why do I think there's going to be more pressure baked into the stock market? Well, I want to highlight, of course, the macroeconomic climate and also monetary policy. So let's just kind of go into a weekly view for Tesla. We could already see the pain from 2022 right over here. But something that's, going to be very difficult for the Feds is just establishing credibility, right? We already lost some sort of credibility that they had because before they were saying that inflation was transitory, and then later on they ended up changing their mind. Well, okay, it wasn't transitory. Now inflation is actually a problem, right? And so they're raising rates so that they could stifle inflation and kind of slow down the economy. But one of the main concerns is that unemployment, right? If we look at the unemployment rate, it's relatively low. And I know that sounds crazy to say that's a concern. In the regular world, that's good. You want unemployment to be relatively low. You don't want to repeat what happened during the pandemic. But the problem, though, is that we're having a very robust job market, right? And one of the things I showed this graph in the Push and Profit private group. I don't have it here, but people are also quitting way more frequently than they have in the past. And you may understand that in a different way, but I'm going to go ahead and break that down. When people are quitting, right, at a high level, that means that there's a lot of opportunity. Someone feels comfortable enough to quit their job because they feel, okay, well, I'll just find another job, right? So that's another sign that the market is very robust for the job market. And this presents a problem, a big concern for the Federal Reserve, right? Because we know that if people still have, their jobs, and of course, job wages are still very high, that's going to contribute to more spending in the economy. How are we going to slow down inflation if people are still spending, right? And if we see, as I pointed out earlier in the video, while the, core CPI is going down, one of the main things we have to pay attention to is United States service inflation. I already talked about this in the beginning of the video, but I don't think you guys might have really understood how significant this is. Overall, core CPI is trending downwards, but service inflation is actually going upwards, right? And so what we're seeing is that the Federal Reserve is having a hard time taming this, and they need unemployment to actually go up so that they could get control of this, because as I stated, this accounts for 50%, over 50% of the CPI report. So this is, what is really playing a big role into inflation as well, right? Of course, energy, food, that stuff is more volatile. That's why it's not included in the core CPI report, right? And so what we're seeing is that the federal fund rate is being raised at levels that it has not been in a long time, right? And I definitely, as myself, have really been very fortunate to come into the market in 2016, where we had very relatively low, interest rates, right? The federal fund rate was low, and we actually had that for a long time. We had a whole decade, pretty much, of low interest rates, and now we're going into a time frame where we're not seeing that same climate. And we're seeing, the federal fund rates have to be raised aggressively. And the thing is, for them to get inflation to 2%, this is still going to have to be raised. So although in the short term, what we're seeing is, the market kind of being a little bit more bullish because, of course, the CPI report came out good. But they're really not paying attention to the important numbers. But they're seeing the CPI kind of show signs of cooling down, so everyone's bullish. But the real thing is the federal fund rates are gonna have to continue being raised by 25 or 50 basis points, right? So even if they reduce it, they're still gonna have to continue, tightening, and that's still gonna hurt the economy, right? I think people already got so used to 75 basis points, 50 basis points that they don't realize that that's actually a big jump. So even if we go down to 25, that's still going to hurt the economy. That's going to hurt the overall market. And so we have to pay attention to what happens in the coming weeks with the earnings reports and really just pay attention. Now, I know Cathie Woods is very bullish on Tesla, right? She's been aggressively buying them. We just saw earlier $20 million in one day, roughly, right? And then we're not even counting the other days where it was 10 million, 20 million, all these other days, right? But we have to also understand that Cathie Wood isn't really like the messiah of the stock market. She's just another fund manager. And to be fair, she hasn't performed that well either. If we take a look into ARK, her main ETF, I would say, and we see that, it's been very bullish on the rally going on, but take a look at this, it performed terribly worse than the S&P 500, worse than the QQQs, and we're having a little bit of a relief rally, but I don't see this really being prolonged. But at the end of the day, we'll see. I know Cathie is someone who's not looking for investing for right now. She's looking at the next 5 to 10 years, and I know she recently made a prediction for Tesla reaching into 500, and I'm definitely bullish on Tesla in the long term, but right now just doesn't seem like the time period for that. But with that being said, guys, let me know what you guys think in the comment section below. And before you go, make sure to check out the links for the Push and Profit private group program, because if you actually click this link, and there is a coupon code, one of the biggest ones, you type in 2023 and you get 50% off. So you have access to our daily briefings and you have lifetime access, right? So you could be in the private chat, you could get all the data and information that I tell all the members before it really goes on YouTube. So you guys could really be a part of the community, but definitely check that out. And with that being said, check out this next video where I go ahead and break down volume profile.